Hi, it's Brian Decker with our Market Minute. Hope everyone's having a great week. I want to talk about energy, oil specifically, crude oil. The International Energy Organization's 31 member nations, including the United States, and 13 associated countries account for 75% of the global energy demand, and the group purports to coordinate oil reserve policy among them. It also makes forecasts. And like global economic football game, the OPEC cartel, which controls 40% of the global oil supply and 80% of reserves, have frequently disputed the international energy's forecasts. So they're making their own. This is new news as of today. OPEC has a long history dating back to 1960 when they started with 5 nations: Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. They've added a dozen more members called OPEC Plus. The price of crude oil is what got our attention. It's trading at a 4-month high of $83. That's up 2% in the last day, 20% since mid-December. The IEA raised its view on 2024 oil demand for the 4th time since last November, when Houthi attacks disrupted Red Sea shipping lanes. The energy watchdog forecast demand said that demand will rise by 1.3 million barrels per day in 2024. Here's the bottom line. The IEA predicts a global oil deficit in 2024. So what is Saudi Arabia and the OPEC Plus people going to do? They're going to cut production by 2 million barrels per day starting January of 2024. That was supposed to be temporary, but now they're pushing it out through the second half of the year. The IEA now believes the measure will not stop until the end of 2024 at the earliest. Energy prices will be going up because of supply and demand imbalance. Prices have to go up to balance that out. That's going to show in inflation. And we are watching this because in our two-sided risk strategy, momentum will shift over to the energy side and the other commodities. So it'll be interesting to watch if we pick that up. Hope you have a good week. This is Brian Decker.